Hey, what's going on, guys? Today I'm going to be showing you how I got my entry and why I'm going to be holding this trade for so long. So on Euro USD, we can see on the higher time frame previously we're bullish, and now we're kind of coming to that point where we're looking bearish. You know what I'm saying? We got a little break of structure here, and we're making lower highs and lower lows, as you can see. Um, this is the highest point, and then we came down, broke under this, made a lower low, then a lower high, and then a lower low, and then a lower high, and now we're making that lower low. So what we could kind of assume next is we're gonna make a lower high and then another lower low and keep pushing down. Um, the reason why my targets are down here, let me delete this. The reason why my targets are down here is because this is kind of the lowest point, and if we go in the daily time frame, this is that daily low, which is usually when I swing trade. These are my targets because this is where price is most likely going to reject that and reverse that. Like, just like we reacted to these daily highs up here and we're reacting down, then we're most likely going to come down here. But as I've started trading like this more, I started realizing on this move down on the daily time frame, if we make a daily low within this move down, then we could think about getting out of our position because it could reverse off a reaction off of the new daily low created. Because what that basically is just new generated liquidity that could cause for a reversal. So that's something I look out for. So when you're holding these trades, this is a 1 to 15 risk reward trade right here. When it comes to these trades, you want to watch out for that. And because that's how the trade could reverse, and then boom. And it's always important when you're going for these crazy trades like this, always take partials. So let's go to today. I took partials at about a 1 to 3, so I took some of my positions out, left the rest to run. This is very good risk reward. I got in this around like 2 in the morning, right before that London session volume kicked in. So yeah, I got in about right here. Um, and then I was just expecting that London session volume to push price down, which that's exactly what it did. London session open. Well, we actually kind of accumulated, and then coming New York session pushed price down. But yeah, this is the trade I took, and I'm explaining to you guys how I caught it. So again, I feel like reversals are the best way to get the best entries possible. You know what I'm saying? Like when the trend reverses, that's the best opportunity you have. And why do I think that? Is because, like, let's say on this reversal right here, right? Um, if we go to the hourly time frame, you could see that once we broke structure, we reacted to these highs over here. We retraced, and if you got your buy position somewhere around here, you could have held it all the way up here, and it's the same exact thing to the downside. Because if we're trading with the trend, we shouldn't be scared to hold it. So, like for example, boom, we get in right here, right? We get in around here. This is our entry. Higher time frame, we're bullish. Stop looking at trends on the lower time frame. Look at the trends on the higher time frame, because higher time frame is what we're gonna go for. Like higher time frame, you could be bearish, but on the lower time frame, you're gonna be bullish. Follow the higher time frame. The higher time frame is not gonna lie to you. The lower time frame in that case will lie to you. So it's always important to follow the higher time frame, whether that's the 1 hour, the 4 hour, or the daily time frame. Always follow the trend on the higher time frame. So if we put buys here, we know that overall we're gonna continue to make higher highs, and that's why I could confidently hold this because we're following higher time frame market structure. We're targeting higher time frame price action, which is gonna give us more confirmation, essentially. So that's about it. Just basically just like remember, trading is all about probability. Nobody has a 100% win rate, but you want to make your chances as best as possible. So one way you could do that is trading with the trend. So if you're in an uptrend, you should not be looking for sells. If you're in a downtrend, you should not be looking for buys. Boom, that takes away 50% of the risk you're going to take. That's higher probability. And then plus with what I'm about to show you, if all those come to play, it's going to make the probability even more. This is a game of probability. Nothing is for certain in this industry. So how I got in this trade is we made these perfectly equal highs, so that's a sign. Not that I used that, but I'm like, okay, that's something to keep in mind because equal highs means, well, it doesn't always mean, but it's a sign of reversal. What I went off of was if we go on the lower time frame, we have these support levels right here, which basically I look at them as okay, this is where buyers were in the market, right? So buyers came down to this level and they held it and it pushed price up. So when we break under that, that means anything under this level, sellers have control of. Not that sellers have control of the whole market, but anything under this level, sellers have control. Sellers have taken control once they've wiped out the buyers. So these lows right here in the higher time frame, buyers are here. We break under it. Now we know sellers are taking control under this level. We can see we come back into this level, we sell off, we come back into this level, we sell off again. And we're continuously making them lower highs and lower lows, which is what I would like to see. So yeah, basically, boom, we get that. And then we go on the lower time frame. So at this point, we're like right here, and I'm like, okay, I'm just gonna wait for a pullback into here. If I don't get that pullback, no trade. It's all good. We ended up getting that pullback, so what I do is I mark out this zone, and I put an alert because I don't want to just be staring at the market. I would be staring at the market for 1, 2, 3, 4, 5, 6, 7 hours. 7 hours. I'm not looking at the market for 7 hours. I'll just put an alert here, go on the lower time frame, and what I'm looking for in the lower time frame is a lower time frame break of structure to the downside. Because what's gonna happen, and this is why people get faked out so much. So on the higher time frame, we're bearish. Higher time frame, we're bearish. Lower time frame, we're bullish. What are you gonna follow? Higher time frame or lower time frame? Higher time frame. So this higher time frame bullish trend is just a mini trend, which is just a retracement on the higher time frame. So you guys are like, okay, market's reversing. Boom, we're making higher highs, higher lows. No, this is all just a retracement to go lower, which is exactly what we did. So what I just wait for, once we get into the zone, I wait for a break of structure like this. So once we break past this low, this is going to be my entry. I kind of entered a little earlier because I just wanted to get my positions in the market because it was already late, and I'm like, okay, we're already bearish on this, so I'm gonna just get in. And I had a lot of confluences into this trade. A lot. I've been looking at this since last week, so I'm like, okay, we're for sure going bearish. So put my positions right there. Woke up and I'm like, wow, we already smacked TPs. Once I was up, we already smacked the first TP, and now we're just holding it all the way down. And it's super simple, guys. It's literally a 3-step rule. Following the trend, waiting for a pullback, lower time frame break of structure. Boom, you're in the trade. As long as you're following the trend, you should be good almost every single time. You can have a really high win rate with this strategy. And another thing I like is you guys are trying to catch every single move that's happening in the market. You guys are trying to catch the sell-off, the buys, the retracements, everything. You might as well just take the whole move. You're taking so many more trades, which is hindering your win rate. Why not just take the whole move down where you know it's gonna go? Like higher time frame, overall we're gonna move down. Why are we gonna take this long right here, then this short, when we could just hold the short until we hit that TP? It doesn't make no sense. So I mean, to each his own with their own style of trading, but we trade to come on the markets for freedom. Like we're not we don't trade to clock 8 hours on the market. We trade for freedom. We trade to spend 20, 30 minutes on the market and get the hell out. That's literally why we trade. That's why we want to quit our jobs. That's why we want to do this and that. So just get into the habit of not taking as many trades. Be smarter with your capital because again, the more trades you take, the more it's gonna hinder your win rate. See, if I'm taking 2 to 3 trades a week, that's not bad. That's not bad. You're telling me 2, 3 trades a week? That's 1 hour on the market a week. 1 hour on the market a week, and that's crazy. That's 4 hours on the market a month if I'm only taking that many trades. Because it takes me about only 20 minutes to mark up my charts. That's it. And that's literally all about it. Like it's super easy. If we're making higher highs, we can expect to hold because we're going to keep on making higher highs. If we're making lower lows, we can expect to hold because we're going to keep on making lower lows. And that's basically all we're doing here. And so in this case, and there's still plenty of opportunities, like me in this entry to set up positions for me to get in more on more moves on the market. Boom. We get, because we're not just going to go straight down. We're going to retrace up and then keep going lower. If we retrace up to, let's say, right here, right? We retrace up to here because this is where buyers previously were. And we would like to see a correction into the zone to keep pushing lower. Who's to tell me I can't hop in these cells again? You know what I'm saying? So I could just take multiple positions within this down move and just make a lot more. You know what I'm saying? Just be smart with it. Super simple. It's not hard at all to do. Just follow risk management accordingly. Like, do not over leverage. I'm telling you, do not over leverage. If you over leverage, that only means you're greedy. And being greedy isn't going to take you nowhere in this industry. You're going to lose it all before you make anything. I'm telling you. Like, if you want to be greedy, go to gambling. I'm so serious when I say this. If you take this as gambling, you have less chances of making it than actually gambling. If that makes sense. Like, you have better chances playing blackjack than gambling on the markets. The markets will literally fuck you up. So don't try it unless you know what you're doing. So that's all I got for you guys today. Hopefully you guys understood. And that's about it. I'm up.